This is the Asia Trade. I'm Shery this week in Singapore.
And lovely to have you here, Shery. I'm Avril Hong. Your top stories this hour. Asian stocks set to extend Wall Street losses as investors shun risk ahead of Nvidia's earnings and the US jobs report. The S&P 500 falling below its 50-day moving average, while Bitcoin traders position for more pain. Amazon joins a spree of jumbo debt sales from tech firms racing to fund AI infrastructure, raising $15 billion. Plus, bond king Jeff Gundlach tells Bloomberg he's loading up on cash and staying away from private credit over what he calls garbage lending.
Yeah, pretty harsh words coming from Gundlach, right? He is concerned about these unhealthy valuations. Of course, not surprising given the incredible run-up and exuberance that we're seeing over artificial intelligence and the fact that, as you mentioned, we do have Nvidia earnings, not to mention the September jobs report coming up.
Yeah, those are the two events I think we're watching out for this week on Wednesday and Thursday that could shape global financial markets for the rest of the year. So unsurprising, perhaps you saw that bit of anxiousness creeping into markets in the U.S. overnight.
Yeah, let's see if that stays throughout the Asian session. But take a look at the setup right now, because we have seen Nikkei stocks lose ground for the last two sessions already. And we are seeing futures under pressure right now. This coming at a time when we saw tourism and retail stocks really leading those declines. Of course, Beijing warning its citizens against traveling to Japan. The diplomatic dispute between the two after Takaichi's comments on Taiwan really deepening. And we're hearing from local media NHK saying the Japanese and Chinese senior diplomats will be meeting in Beijing today. So we'll be watching out for that. Also, we're watching Prime Minister Takaichi meeting with the Bank of Japan Governor Kazuo Ueda later this afternoon as well. Take a look at ASX 200 right now, early in the Asian session, down 0.8% as the offshore yuan is holding at that 710 level. Of course, we are also watching some idiosyncratic news like the trading debut of Pinkfong. That's a baby shark jingle company.
Yeah, that would be one to watch in the markets in Korea today. But looking back at what we saw in the U.S. and how that might shape trading for the rest of the week, right? Because if you look at the S&P 500, stocks were down for a third day. You see volatility creeping back in, especially in the Russell 2000. You have the broad-based gauge in the lowest in a month, and it actually broke the 50-day moving average. So it's a clear sign of how investors are shunning riskier assets. And then you pile that on with these debt issuances coming from yet another hyperscaler, Amazon this time, $15 billion after similar moves in the past couple of months from Meta, Alphabet, Oracle. What does this mean for the broader treasuries or debt markets? We did see the rally in treasuries capped a little. The dollar rose, and all this came in spite of the Fed speak. Take a listen.
This reading of the data leads me at this moment to support a cut in the FOMC's policy rate at our next meeting on December 9 and 10 as a matter of risk management.
I see the balance of risk in the economy as having shifted in recent months, with increased downside risk to employment compared to the upside risk to inflation, which have likely declined somewhat recently.
Let's bring in our Asia Markets Executive Editor, Paul Dobson. So, Paul, we were talking about this a bit yesterday, but today a deepening sell-off in the U.S. What is all this going to mean for Asia?
Good morning, Avril. Once again, we find ourselves looking at a down day for the Asian markets following off the back of what we saw in the US. Really, that's sort of setting the tone at the moment, not just what we've seen in US equities, but also these moves in crypto markets. At the start of our day yesterday, Bitcoin had a bit of a bounce, actually. It looked like maybe it had found a floor, but then by the end of the day, it had been setting new lows again in the US session, and people are taking that as a bit of a sentiment gauge and a barometer of risk appetite at the moment. I think what's different this time with crypto is, or each time we go through a cycle where it has one of these big booms and then draws down again, is that more and more institutional investors are on board and getting hurt. And so that's what starting to give it more and more impact on the global markets as well. And so that hasn't helped matters. It's like you said, a lot of the anxiety seems to be about what's coming up ahead and not anything that happened yesterday per se or any new news. We're waiting for those fresh inputs. But at the same time, the momentum turning is certainly something that's a factor that could influence programmatic traders, trend-following funds that have been riding a lot of the gains in our markets as well as in the US markets, and may also need to trim their positioning right across their portfolio and therefore turn to sellers of Asian markets as well.
Yeah, and it's really about that exuberance, even in the private markets, right? That's causing some concern about where we go from here, especially those unhealthy valuation concerns. But take a listen to what Jeffrey Gundlach had to say about the markets right now.
The next big crisis in the financial markets is going to be private credit. It has the same trappings as subprime mortgage repackaging had back in 2006. Now, it took a couple of years for it to totally unravel. So this stuff doesn't happen in a week or a year even. But I'm very negative on that.
And yet, Paul, you still have these bullish calls coming from the Morgan Stanley's Michael Wilson, for example, talking about a 16% rally still on the S&P 500. So can you still rally and also face a crisis?
Well, I definitely think that there is that sort of time lag to take into account. Jeff Gundlach was talking about the idea that it doesn't all happen in a day. It could be a slow burner. When we saw Michael Burry retreating from some of his holdings in tech stocks and selling those options or buying those options, betting on prices that would be lower over time, that wasn't a trade that was due to really kick in until 2026. So you could see the idea that, yes, people are thinking we're in a bubble, but it could inflate a heck of a lot further before we see it pop. And so therefore people are worried about those long-term risks, but there's a lot of shorter term, next 6 months, next 9 months, potential opportunities that people are eyeing at the same time. That's the kind of quandary I think that people are in at the moment. We know that longer term, not everybody can be a winner in this AI investment trend, but at the same time, we know that there probably will be some winners. And the only way that the hyperscalers are seeing to be able to be that dominant force is to put all of this capital up front and get ahead in terms of the build out. And so that's the troublesome thing, right? Everybody knows that there's going to be winners, there's going to be losers, there's probably going to be some reckoning at some point down the line, but you don't want to be out of the race already and calling it quits, because then you're potentially leaving a lot of chips on or opportunities on the table untapped.
Might the reckoning come in the form of the Fed? Maybe not at the next meeting, but in the first half of next year. I mean, we're hearing from the Fed speakers in terms of Jefferson, Waller. They seem to be more worried about the weakness in the jobs market. But if you look at the pricing, markets are still betting, 40% chance of a cut next month?
Yeah, Jefferson and Waller aren't really the people to worry about. I think that the market knows they're more on the dovish side of things already. But there's that sort of middle band of Fed policy makers that went along with the cut last meeting, but have voiced some concerns about it and expressed the idea that they don't necessarily see the need for a move in December. And in the absence of too much data providing them with firm evidence one way or the other, they may choose to sit on their hands. And then I think you're right. Maybe at the start of next year, there might be even more of a protracted pause. But what we do know is that Powell's coming to the end of his tenure and that Trump still wants interest rates to be lower, and that at some point he's likely to be looking to replace some members of the Fed Policy Committee with more dovish members as well. And so, sometime next year, the market will be expecting that the Fed will cut some more. But the question is, will that become too late because the economy is genuinely in that downturn, or is it right to wait because that inflation is sticky? And that's the dilemma that they're having to grapple with and trying to explain to us each and every day where the market is taking its signals from.
Executive editor for Asian markets Paul Dobson there with the latest on potential risks in the markets as we continue to see this borrowing spree among corporates. Amazon has raised $15 billion in its first U.S. dollar bond offering in 3 years. The move adds a spree of jumbo debt sales by tech firms as they race to fund AI infrastructure. Let's get more with our Asia tech correspondent Annabelle Drewlers-Bell. So the proceeds topping estimates, what will they be used for?
Yeah, that's right. The initial goal was actually $12 billion, but you can see that Amazon really well exceeded that. But in fact, we're being told at the peak, this was a bond that attracted about $80 billion in demand, but then orders were cut in half, and that was as borrowing costs started to fall during that sale process. But yes, you're asking about what it's going to be used for. Well, in short, it's everything. It's acquisitions, it's capex, it's share buybacks. Again, this is according to sources that are familiar with the matter, but it certainly does add. And I heard you mentioning earlier, Avril, just this being the latest hyperscaler doing this sort of thing. But yes, in the last month, we've seen Alphabet, for instance, selling $25 billion of debt in the US and Europe. We've seen Meta, for instance, issuing $30 billion of corporate notes. Oracle raising $18 billion as well earlier this year. So it really is that broader push that we're seeing in the AI space to fund these very expensive AI endeavors. But back to what this specific sale looked like, well, it was offered in 6 parts. Again, that's what we're hearing here. But pricing on the longest portion of the deal, that's the 40-year note, was tightened actually during the process to 0.85 percentage points. That was from an earlier 1.15 percentage points above Treasuries. Goldman Sachs, JP Morgan, also Morgan Stanley, these were all the banks that were managing the bond sale as well.
Yeah, it's really part of this issuance spree from the tech giants. But, Belle, you've also been tracking what Jeff Bezos has been doing. The New York Times has been reporting he's launching a new AI startup. What do we know?
Yeah, that's right. So this is going to be called Project Prometheus. Now, Project Prometheus, I had to do a bit of a refresher on my Greek mythology, but just to give a bit of context on this one, Prometheus is the deity that was known for his intelligence, essentially, but also his defiance of Zeus. But yes, getting back to that New York Times reporting, so it says this is the company focusing on, the company will focus on AI that's going to be used for engineering and manufacturing of computers, automobiles, and aircraft. So Jeff Bezos, he's going to be taking on the role of co-CEO, and the company as well, what the New York Times says, is going to be coming out of the gates with $6.2 billion in funding. Part of that is said to be coming from Jeff Bezos himself, but certainly at that point, north of $6 billion, you're looking at one of the most capitalized early-stage startups in the world. So it is the first time we've seen Jeff Bezos taking on a formal role in a company since he stepped down as the CEO of Amazon back in July 2021. He is deeply involved in Project Blue Origin. That's, of course, the competitor to Elon Musk's SpaceX, the space company, but his official title at that place is founder. So, yes, taking on that role of co-CEO is certainly, I guess, a step in a new direction for Jeff Bezos.
Val, thanks for keeping tabs on these tech developments for us. Annabelle Drollers, our tech correspondent for us there. We have more ahead on the Asia trade. This is Bloomberg. Now, one of our other top stories we've been tracking, this diplomatic spat, Shery, between China and Japan. Japanese media reports say senior diplomats from China and Japan plan to meet in Beijing today. And this is coming against the backdrop of this dispute over the Japanese Prime Minister's comments over Taiwan, those tensions continuing to simmer.
Yeah, and she's not really backing down. Let's bring in our China correspondent, Mingmin Lo. Mingmin, we know that these diplomatic spats happen between China and Japan every few years or so. What's significant about this one, and the fact that we might see some senior diplomatic leaders actually get together, will that bring down the temperature?
Yeah, this is particularly significant because China is seeing this as a strategic shift in Japan's stance. This was a People's Daily editorial that really warned against that because Takaichi is giving legal justification for Japan to intervene militarily in any conflict with Taiwan. And the article also cited how, we are seeing Takaichi really laying the terms early on in her career as a prime minister, and, how she is accelerating the increase in Japan's defense budget as well, how she's loosening restrictions on arms exports and trying to develop offensive weapons and so on. So they're seeing this as an important shift in Japan's stance from strategic ambiguity into something more forceful. And so China has been responding very forcefully. Of course, Japan officials were traveling to China yesterday, and reporters were asking the foreign ministry whether they had any information to share. They didn't, but we are hearing from Japanese Japanese media that there will be meetings taking place today, hopefully to cool the tensions down. But we had seen, for example, aside from issuing a travel advisory to students and to Chinese citizens not to go to Japan, we also see Chinese state media reporting that some film distributors have delayed the screening of certain Japanese films as well, citing cooling audience sentiment towards these films.
On that travel advisory that Beijing issued, what are we seeing in terms of the impact? Are people canceling their trips?
We are seeing pretty mixed results at the moment from what sources are telling us, and this is based on interviews with people from some of China's biggest travel platforms. They're saying they're not really seeing a lot of cancellations at the moment. ANA as well, that's the All Nippon Airlines, also saying not a lot of cancellations at the moment. But if you look on Chinese social media, we are seeing pretty mixed reaction, especially on Weibo, which tends to cater to the older audience. The comments there are a lot more nationalistic. A lot of people are saying, they're not going to go to China, to Japan in their lifetime, even if it's a free trip. And some are saying, they're seeing Japan becoming, more and more arrogant. They're not repenting at all, and we should put our flags on the Senkaku Islands and station our troops there. The issue of national security and national sovereignty is not negotiable. But on the other hand, if you look on Xiaohongshu, where a lot of young people tend to gather online, we are seeing people saying, life is life, politics is politics, and people's situations are different. They have already paid for their trips. You don't necessarily get a refund if you don't buy from a domestic airline. It would mean losses if they cancel their trips. So they're still going ahead as long as they feel that they're clear-headed about where they stand. It doesn't really matter.
Bloomberg China correspondent Ming Lo there. Let's turn to the United States. President Trump says he will approve the sale of F-35 fighter jets to Saudi Arabia when he meets later Tuesday with Crown Prince Mohammed bin Salman.
Tomorrow you're hosting Saudi Arabia. Are you planning to sell F-35s to Saudi Arabia?
Yeah.
And also, are you looking at doing a similar security agreement like you did with Qatar?
Yeah, no, I am planning on doing that. Yeah.
You're going to sell the F-35s?
They're a great ally. They've got to like us very much. Look at the Iran situation, what we did in terms of obliterating, we obliterated their nuclear capability. Yeah, I will say that we will be doing that. We'll be selling F-35s.
Let's bring in Bloomberg senior editor Derek Wallbang. So, Derek, what do we know of this plan? And perhaps more importantly, what does this tell us about deepening ties between Riyadh and Washington?
Well, Avril, the details of the plan are pretty much what Donald Trump said. We'll get an idea maybe tomorrow of how much or the overall scope of the plan. But the big question here had been a yes-no decision. Would the United States be willing to sell its most advanced fighter jet to Saudi Arabia? Right now, it only sells the F-35 to really long-time, close military partners across the world. So this is a very big designation for Saudi Arabia. So that's the big thing there. I think you can read into this quite rightly that there's a big warming between U.S. and Saudi ties, I think, over the last several years. Trump has famously been trying to bring Saudi Arabia on side for several years. This is a priority country, I would say, for him when he's looking at geopolitics. He and Mohammed bin Salman have had a pretty good relationship bilaterally. And the big thing that Donald Trump wants to get to eventually is a warming of ties between Saudi and between Israel. He has said on numerous occasions he wants Saudi Arabia to join his landmark Abraham Accords to get a sort of bilateral recognition going there. That is a very difficult thing to do for any number of reasons that would take hours to get into. But that's sort of the big prize that Donald Trump is looking at here. This F-35 is a really, really big deal. There had been a lot of concerns in Washington about doing so for a couple of reasons, not least of which that the Saudis also have close defense ties with China. And a key imperative of the United States when dealing with the F-35 is to not let any of its most advanced technology get into China's hands.
And Derek, we also had President Trump making comments on military action in Mexico. The president seems to be taking his war against drugs to a whole different level.
Yeah, and we saw that weighing on the peso today. I mean, basically what happened was that at the White House, Trump was asked about his Latin American anti-drug campaign. That's the one where you've seen strikes on boats off of the coast of Venezuela. And he was asked about this in a sort of broader kind of way. And he basically said, look, he doesn't necessarily have any objection to increasing a campaign in Venezuela. Also doesn't necessarily have any objection in theory to the idea of taking sort of offensive actions with regards to Colombia and Mexico. Now, this kind of muddles up a little bit of the overall U.S. picture of what Donald Trump is trying to do here and where his goals are. He has said a lot of stuff about Mexico before in terms of, the U.S. is willing to go into Mexico to go disrupt cartels. A lot of the things that he's talked about with Mexico over this term and also the prior term that he haven't really happened. So I think there is a fair amount of skepticism that's baked into a lot of these ideas, but no question, any amount of uncertainty does tend to weigh on the Mexican currency. It is worth looking at this. Donald Trump is serious as a heart attack about the idea of being tougher on drugs. He's also very, very serious about the idea of trying to increase his pressure campaign against Venezuela. And so there's a lot of things that are going on there. One thing I would note is that when you're considering overall pressure strategies, the U.S. did move an aircraft carrier strike group down into the Southern Caribbean, and that is a meaningful increase in its sort of defense posture in the region in ways that maybe some other of his ideas, if you're thinking about annexing Greenland or something like that, that weren't really backed up with anything. Moving a carrier strike group down into the Southern Caribbean is a tangible asset, is a tangible move, and sometimes you really do have to pay attention to where these tangible moves are. I think in D.C., the big question right now is not Mexico, but what's Trump going to do with Venezuela?
Yeah, what's he going to do? I mean, it's also how he's been threatening Latin America, moving beyond Venezuela, and now Mexico and Colombia look in his sights. There is a lack of clarity, though, on the U.S. strategy in that regard. But we are actually seeing the U.S. president speaking at this McDonald's Impact Summit. And he's been talking about getting inflation lower. This, of course, has become a key issue following the elections a couple of weeks ago. And there's been talk about, when it comes to the Fed's inflation target, is 3% the new 2%? Trump is now saying they want 1% and they want to get inflation a little bit lower. I guess in that regard, we have been seeing the lowering of tariffs on some products, including beef, to ease food prices. We have more ahead on the Asia trade. This is Bloomberg.
Here are the latest from the corporate front. Xpeng's U.S. traded shares plunged 10% after its fourth quarter revenue forecast missed expectations. The EV maker expects $2.6 billion in sales, even as its third quarter loss narrowed more than expected. Investor optimism had surged as Xpeng pushes into robotaxis, flying cars, and humanoid robots, but the weaker outlook raised new questions about its path to break even.
Shery, Rio Tinto is adding new surcharges on aluminium headed to the U.S. as tariffs tighten supplies and inventories drop. The extra fees stack on top of the already high Midwest premium that's pushing costs to more than 70% above the raw metal price. And the U.S. aluminium market now described as all but broken, with buyers forced to pay up as Trump's tariffs drive stockpiles to record lows. We have more ahead. This is Bloomberg.
Take a look at how Japan assets are setting up for the open in just about half an hour. We had seen tourism and retail stocks slumping after Beijing warned its citizens against traveling to and studying in Japan. The deepening diplomatic dispute continuing, and you can see Nikkei futures losing 0.9%. We're watching Prime Minister Takaichi also speaking with the BOJ governor this afternoon, and this after reports showed that the Japanese economy contracted in the last quarter. So do watch out for any comments coming out from that meeting. And you can see the JGB yields, JGBs were under pressure the previous session, so do watch out for that. We are seeing more of this fiscal risk premium baked into the Japanese bond markets, according to Goldman Sachs. State Street Investment Management also launching 5 locally registered ETFs on the Tokyo Stock Exchange. Its first such offering in Japan. Let's get more on this strategy to expand into the retail space. Anna Paglia is Chief Business Officer at State Street Investment Management, and she joins us exclusively from Tokyo. I'm sorry I'm missing you in Tokyo. I'm this week in Singapore, but tell us a little bit about what drove you to launch these products.
Sure. Thank you so much for having me, first of all. It's great to be here. This is an exciting week for us at State Street Investment Management. We are launching 5 new ETFs in Japan, and this is not our first entry into the Japanese market. At State Street, we have been very active in Japan for the last 25 years. We have a number of funds that are cross-listed and cross-registered here, but for the first time we went 100% local because there is a great momentum in the Japanese ETF market. We have observed the market grow. We have observed the policy changes. The fund is growing at a 20% rate year to date, and this seemed to be the best time for us to bring what we do best, which is our ETFs, to Japanese investors.
How much momentum is there from the NISA program? That's, of course, a tax advantage program for retail investors that can actually put their savings into this scheme. So how much of that is driving the exuberance in Japan?
Well, most of the exuberance is really driven by NISA because these policy changes are really leading the way for new investors to walk into the market. NISA is certainly playing a big role, especially when it comes to smaller investors. And I'm talking about retail investors, middle-class investors who maybe historically have not been really active in financial markets, but have seen NISA as an opportunity to move their cash from the bank deposits into financial markets, which is something that we believe is really going to help the Japanese population participate in the growth of financial markets. On top of NISA, there is also the inflationary environment, which really makes it very appealing and very compelling to move out of cash and get the diversification via ETF exposure.
On top of that, we also have the country's fiscal profile under the new prime minister. How much is that adding to the case for Japanese stocks?
Well, it is really creating an environment in which new policy is really meeting with the macro environment. The tax stimulus, the policy decisions of this new administration is really helping fuel a new interest in financial markets. We do believe that democratization of financial markets is really important, and we do think that today the Japanese market, in particular in Tokyo, is really providing best-in-class opportunity for retail investors or middle-class investors to take advantage of this new environment.
And how does that perhaps feed into the case for Japan as you compare that versus the US or Asia as part of your business strategy?
Well, if you look at financial markets and if you look at the strategies that we are bringing to Japan, we are doing this bell ringing tomorrow, because tomorrow is going to be the official first day of these 5 products in market. We think that there are opportunities with U.S. equity markets. There has been a great momentum with the U.S. equity. We have seen tremendous flows still going into the U.S. equity markets, and this is why we are bringing 2 funds with that exposure. We also look at income, which is something that investors have been really focused on. So income that comes in the form of dividends oftentimes. So we are bringing an exposure to dividends. And on top of that, we also brought exposure to gold, because 2025 has been really a success year for gold that has been seen as a way to not only diversify away from traditional equity, but also something to be used as a hedge against volatility and inflation. We also think that the new economic environment in Japan is leading the way for additional strength and growth in Japanese equity markets, which is something that we are monitoring very closely when it comes to 2026.
You talked about volatility and the reason why you're launching that gold ETF. Tell us a little bit about the geopolitical issues that might potentially affect some of these investments, given, of course, that we continue to see the rising tensions between China and Japan right now.
Yes, so volatility is really not just limited to APAC. So definitely the tension between China and Japan is adding to an environment of volatility. But if you look at that from a global level and through global lenses, you will notice that volatility has been something embedded in the market throughout the year because of the tariffs, decisions made at the U.S. administration. We have seen the highest volatility during Liberation Day, and it is something that the geopolitical regime, the geopolitical issues with regard to different country tensions is going to continue to bring into financial markets. So for us, it's really important to give investors certain tools that not only can help them grow and appreciate their portfolio, but can also help them mitigate this type of volatility.
What about the corporate governance story that has propelled much of Japan's equity markets in the past year or so? Is that narrative still intact?
It is still intact. So governance, corporate governance is incredibly important. And the strong governance is really something that is going to drive stability and resiliency of financial markets. When we look at Japan and we look at the progress that the policy decisions and the regulatory environment are bringing with additional governance embedded into listed companies and equity financial markets, we really think that this is something that is going to fuel the expansion and the growth of the market in 2026 and beyond. So when we look at our product strategy, the pipeline, what we want to bring to clients, we usually start with something that we do believe is working. It has worked, that can provide exposure, and the U.S. equity is definitely the way to go to lay the foundation and the building blocks to a client portfolio. But definitely what we are observing is that increased attention to corporate governance and progress with the regulatory changes and the policy with regard to governance is really strengthening the financial market and the equity market in Japan. And that is going to really help us think about future strategies for local investors who want to go local. I mean, ultimately, what we think Japanese investors will look for is options that allow them to stay local, whether it is globally listed products or it is locally listed products on local equity, which is going to be step 2 of our product process.
Anna, I wonder if you could also weigh in on the risks you're observing in the private markets. I mean, past couple of months, we've heard them being described with the words from cockroaches to garbage lending. How would you weigh out these risks as part of your business calculus?
Well, private markets come with two challenges. So the first challenge is price transparency. The second challenge is liquidity. We do believe that private markets are going to be the next frontier for investors, including retail investors, because private markets come with less liquidity but additional yield that, if carefully managed, can be a very strong component in a client portfolio. I mean, obviously, we are going to have to work to eliminate that type of liquidity risk, and we are going to have to work with issuers to make sure that there is a transparency and that the quality of the assets is such that we are not going to land in a situation that really paved the way to the last financial crisis. But we do think that whether it is private credit, infrastructure, real estate, this is part of an exposure that, if carefully vetted, if carefully administered and included in the context of a wider portfolio diversification, can help investors increase their yields. As a matter of fact, we did look at that this year. We formed a number of partnerships with also providers and private market providers like Bridgewater or Apollo in the US that have really helped us bring to market a solution for our clients.
Certainly, that's a sector that's been seeing a lot of opportunity, but also come under close scrutiny of late. Anna, thank you for coming on, sharing your business strategy with us. Anna Paglia is Chief Business Officer at State Street Investment Management. We have more now on private credit and Jeffrey Gundlach's warning that what he calls garbage lending in the sector could be the catalyst for the next big market meltdown, though KKR's co-head of credit and markets disagrees. Christopher Sheldon telling us exclusively that the risk to managing that is keeping a close watch on valuations.
We're just not seeing that elevated concern. However, we are seeing slowing in the economy, and we are seeing more dispersion in results. We see that in the public markets, we see it in the private credit markets, but we're not seeing that level of concern that Jeffrey mentioned.
It seems like we haven't really seen a million cockroaches, right? You've seen a couple of really idiosyncratic issues, and it's hard to argue otherwise. The problem isn't that there are occasional bankruptcies here and there. It's that BlackRock marked this debt at 100%, and then 2 weeks later at 0, even though they knew from months beforehand that there had been negotiations about a revamp here. It's the marks that are the real problem in these issues. And do you think that the industry needs to look inward and figure out a better way of doing that?
Look, I mean, I think we use a third-party valuation to evaluate all our illiquid assets. And I think where you're seeing dispersion in the valuations are when assets underperform. And so I think it's really just about a policy to make sure that you're working closely with those independent valuation providers to make sure you're giving the real up-to-date information of what's going on in an individual credit. How others are doing it and the velocity of the moves is depending on each situation. And you are seeing, to your point, very idiosyncratic situations that sometimes move extremely quickly in terms of if they're hitting a liquidity wall to where maybe there is a little bit more aggressive in quickness of moving that mark.
Chris, it's interesting you talk about the divergence because maybe the kind of dirty little not so secret of this industry is that private credit returns don't look that different from player to player unless you do something that really gets messed up. So in a world where you also have more money coming into the asset class, where you have rates coming down, how difficult is it to find alpha right now in private credit?
Yeah, and private credit is defined, depending who you talk to, it's defined in many different ways. And you're right, there hasn't been a lot of dispersion in corporate direct lending returns manager to manager, although I expect more and more dispersion to happen. And so what we're really doing across our corporate direct lending book is running very diversified portfolios, keeping it very high quality at the upper end of the middle market. And I think that's where you should be playing, is not reaching for that incremental yield, incremental few basis points, which often leads to risk. I think where dispersion in returns will happen is when you make more concentrated bets or you're reaching for incremental risk.
KKR co-head of Credit and Markets, Christopher Sheldon, speaking to Matt Miller and Danny Berger. We have plenty more to come. This is Bloomberg.
Shery, on a lighter note, the trading debut that we're watching out for in Korea today, the Korean company behind the most watched YouTube video of all time, debuts today on the small cap Kosdaq. And Baby Shark creator Pinkfong raised about $53 million in an IPO that values the company at about $370 million.
I really don't know how this went so viral, but let's discuss all of this and preview with our Asia Equities reporter, Yu-Young Lee. Yu-Young, I mean, look at that video. They're so cute. This do-do-do-do went so viral. I don't think I'm doing that right.
But, I think you're on bang on
Are people as excited as we are over here?
Yes, Shery, good morning. So, yeah, I think retail investors are definitely excited. The IPO has been subscribed 600 times more than the shares were sold. And yes, the Baby Shark, it was released almost 10 years ago. So it's getting a bit old, but it's still the most watched YouTube video in the world. And whether that YouTube sensation can become a stock market sensation, we'll be watching that today. And whether there will be the first day pop. But I think the mood among the institutional investors is a little bit more cautious than retail investors. There's some questions about valuation. Yes, $370 million at the price at the top of the marketed price. That's not expensive, but that's also not cheap. And there are companies that investors are comparing Pinkfong to, including the SAMG Entertainment locally, that's known for the Catch Teeny Pink characters that are very cute fairies, and that company is valued a little bit less than $370 million, even though its revenue and profit during the first half of this year was bigger than that of Pinkfong. Now, the Baby Shark company has some advantages. A lot of its revenues comes from overseas, and most of its intellectual properties are, most of its revenues also coming from its intellectual properties, licensing, collecting royalties. So there are some positive bright spots for the company, but whether this valuation is still cheap, I think there are some questions. So we'll have to see whether there will be first day pop. I think a lot of investors are saying, have been telling me that the first day pop might be a little bit difficult, but we'll see in about a few minutes.
Yu-Kyung, this trading debut reminds me a bit about the company behind Labubu, Pop Mart, right? And look at how its shares have come under pressure of late. So I wonder how sustainable is all this after the IPO? What's next? Beyond the IPs, what is in its character pipeline?
Yeah, that's a good question. So it's not all that rousing given how the Pop Mart share has been down from its peak. And also, if you look at the Hello Kitty maker in Japan, Sanrio shares are also down quite a bit from its peak. So the backdrop for this trading debut for this Baby Shark maker isn't that great. But the company has been saying after raising this $50 million from the IPO, it wants to accelerate the speed of releasing the new characters and new intellectual intellectual properties from 3 years down to 1 or 2 years so that it can make more breakout hit. And even though the Korean culture has been really popular, you also have to be reminded that the Baby Shark is still pretty popular among toddlers. So I think the key question is that whether the company can make the characters new intellectual property that appeal beyond toddler to all age group. And if you look at some of the popular content company, their content has had a broader appeal regardless of the age group. So I think that's the key challenge that Pinkfong, the Baby Shark company, is facing, that it has to prove to investors that its characters will have appeal beyond like 2-year-old, 3-year-old toddlers. And my 5-year-old nephew, definitely they have graduated from Baby Shark and have moved on to other characters. So I think we might judge based on like how popular those characters can be beyond the toddler's age group.
Yeah, I know if parents were sick and tired of Baby Shark, but nonetheless, exciting trading debut today. Our Asia stocks reporter Yu Young Lee there watching Pinkfong. More ahead on the Asia trade. This is Bloomberg.
Some top global stories we're following. India says it's close to finalizing the first phase of a trade deal with the U.S. that would cover reciprocal tariffs after months of talks to lower the 50% levies. Commerce Secretary Rajesh Agarwal says the two sides are working on an agreement that would be implemented in multiple parts, with the first more or less near closure. President Trump said last week he would lower tariffs on India at some point.
The EU plans to warn the U.S. against expanding the list of European goods hit with 50% steel and aluminum tariffs. Brussels says the widening scope undermines this summer's trade deal, which set a 15% tariff cap on most EU exports. EU officials will press U.S. Commerce Secretary Howard Lutnick to stick to the spirit of the agreement and are pushing for a quota system to lower duties on some metal shipments.
Two ministers from Philippine President Ferdinand Marcos Jr.'s cabinet have resigned amid corruption allegations. It's the first direct impact on Marcos's government from a multi-billion-dollar scandal that sparked widespread public anger. Marcos first exposed the misuse of state funds meant for flood control in July, with the scandal becoming a drag on the local economy and markets.
A special tribunal in Bangladesh has sentenced exiled former Prime Minister Sheikh Hasina to death, finding her guilty of crimes against humanity. The judges said Hasina was guilty of ordering the killings of students and using weapons against civilians in a violent crackdown on protests last year. Hasina, who remains in exile in New Delhi, called the ruling biased and politically motivated. Take a look at how we're setting up for the market opens across Asia. We had Nikkei stocks falling for the last two sessions, and we're still under pressure today. Of course, Avril, a lot of really anxiety when it comes to valuations, especially on those high-flying tech stocks.
And unsurprising, we saw how they're shunning these riskier assets, right? You talked earlier about how markets are really watching out for these two events that could shape things for the rest of the year, including Nvidia and those Fed minutes on top of the September jobs report. So as we count down to the market opens, some things to keep in mind. We'll keep watch on where we go when Seoul and Tokyo open. This is Bloomberg.
This is the Asia trade. We're counting down to Asia's major market opens after we saw more pressure on Wall Street overnight. Avril, of course, there's anxiety out there given that we do have Nvidia's earnings coming out on Wednesday, not to mention the September jobs report on Thursday as well.
Yeah, there's a lot of nervousness and investors have already been moving along with that. So you're seeing them shunning these riskier assets. And then you've got the geopolitical backdrop to consider as well when it comes to China and Japan. Do we see a bit more pressure coming into those retail-facing stocks in the session today.
Yeah, those travel stocks in the Japanese stock market were under pressure in the last session, down for 2 sessions already. But take a look at the open, because it's really about, as Avril mentioned, the geopolitical tensions that continue between Beijing and Tokyo. We are hearing from local media that senior diplomats will be speaking today, but the fact remains that the new Prime Minister Takaichi isn't backing down from her comments on Taiwan, which has really started this diplomatic crisis. And you can see right now the topic's down 0.7%. We're also watching SoftBank, which is one stock we'll be watching in trading today, because we just heard that it won approval from the U.S. Federal Trade Commission when it comes to that deal for Ampere, which makes processors for data center machinery. And remember, SoftBank sold all of its stake on NVIDIA and wants more AI infrastructure acquisition. So that's a key story that we'll be watching. And SoftBank down at the moment 2%. As the Japanese yen holds steady at that 155 level against the U.S. dollar, you do have to watch out for the BOJ Governor Kazuo Ueda meeting with Takaichi later this afternoon as well. Take a look at South Korea, because Baby Shark creator Pinkfong just gaining 55% from the IPO price, making its trading debut in South Korea and soaring at the moment. And Avril, of course, we have talked about this. I mean, there's a lot of, optimism, excitement about the Baby Shark 222 story, but will that optimism continue is a key question. And you just talked about how it could potentially look something similar to Labubu, right? And Pop Mart now doing very well right now.
Yeah, and I think also the big question in markets for South Korea is value versus what we're seeing in tech. And does the buying come back for some of these chip stocks? Samsung, SK Hynix, suddenly we saw a bit of that trickling back into the markets just a day ago. Let's take a look at how U.S. assets are faring as well, because it was that further selling, deepening for another day on the S&P 500. We saw it breaking through the 50-day moving average. Futures pointing to a slight bump, but we are also seeing those concerns in the Treasury markets. Don't forget, we have gone from a coin toss on a Fed rate cut come December to roughly 70%, and then now we're back down to 40% with all this Fed speak to contend with as well. The 10-year yield at around the 4.14 level now. So we are seeing that selling continuing in Treasuries. Of course, it's also got to do with the hyperscalers and how they have been going to the debt markets, more and more issuance. Does that take some of the demand away from sovereign debt? On that note, let's bring our next guest, Kelvin, regional CIO at UBS Global Wealth Management. He maintains the view that the equity bull market is intact. Kelvin, good to see you. You're in Hong Kong this morning. Talk to us first about what you're watching out for in markets this week. I mean, it's NVIDIA, it's the September jobs report. What could derail the bull market?
But I think if the jobs market data comes out particularly strong and is well above consensus expectations for the months of October and September, that could potentially actually be a catalyst for a further sell-off in the equity markets, largely because of the fact that, the markets are actually pricing in about 10 bips of cuts for December. And if the jobs data comes in particularly strong, then obviously the market will basically have to reassess its options for the Federal Reserve's move at the next FOMC meeting in December. And that will likely send 10-year yields soaring. And if that's the case, then obviously that's going to be a dampener on the US equity markets. But we do think that the Federal Reserve is likely to actually continue its cuts. No doubt they have to actually balance between inflation and a weakening jobs market. But we do think that the jobs market in the US is actually pretty weak right now. And it should actually make the Federal Reserve actually cut rates by 25 basis points in December.
But what if it doesn't, though? Because there's so many unknowns out there, right? And the pricing for December now is 40%. Next half of the year, we don't know how big of an issue inflation might be. Lower oil prices may be putting a lid on price pressures. But what might higher for longer from the Fed actually mean for tech?
Higher for longer is obviously going to be negative for tech. We saw how that actually panned out in 2021, 2022 when the Federal Reserve actually got its call on inflation wrong and started to actually hike rates by about 75 basis points for 3 times in a row. And that was actually particularly negative for the tech sector. Also, at this point in time, you have basically the hyperscalers and a lot of the tech industry issuing debt, as you rightly pointed out earlier, to fund a lot of their investments within the AI sector. So if they have to actually fund it at higher yields, then obviously that's not going to be very positive for the entire market market altogether. But again, we do think that the risk of that is actually quite low, given the fact that a lot of the hyperscalers are actually AAA rated. They have very strong balance sheets, very positive cash flows, with perhaps the exception of one or two. So overall, on that basis, we do not think that that is actually a negative move for the overall markets. But I think we will get more clarity this week as the jobs data is actually released by the US government.
So as we await those numbers and, of course, NVIDIA's earnings from the U.S. side of things, what will you be watching across Asia to see if the momentum continues?
I think in Asia, the dominating news right now is basically the tensions between China and Japan and how that is actually playing out. But as you know, geopolitics have never had an overriding shadow on the equity markets itself, and it tends to actually fade off after a couple of weeks. So we don't think this is anything different. I think what's more interesting in Asia is roughly with regards to the movement where the dollar is concerned. I mean, the dollar has actually been very strong against across the board all Asian currencies, with perhaps the exception of the Taiwanese dollar last week. But a strengthening of the dollar is usually quite negative for Asian equities because of the very strong inverse correlation between equities in Asia and the US dollar. So we do need the dollar to actually have a breather before we can actually expect the Asian equities to continue to outperform this year.
Hey, Kelvin, let me ask you a random question because we're seeing the Baby Shark creator Pinkfong just rallying in its IPO debut today. Stocks like this, very idiosyncratic. They have their own ecosystem they've built for the past 10 years, characters. Baby Shark, obviously very popular among children and, the target of hate by some parents who have had to endure that song for a decade now. But, we're talking about Pop Mart as well and Labubu. I mean, how do you see these stocks? Are they just a fad, or are they actually an investment, target?
I think there's no doubt that there is a lot of demand for companies like that right now, as you rightly pointed out, given the IPO performance of this year. But I think on a medium to longer term basis, these companies need to build a story around it. And it has to actually build the whole universe of characters to support the entire storyline and not just have one or two characters out there. Because after a while, people tend to get a little bit more fatigued by the developments. So they need to really build a story and have the story actually generate enough momentum for people to continue to be invested in the story. That, I think, is where it is actually very key. And, if you look at the historical examples, a couple of companies in Japan have actually been able to do that very, very well, such that, 30, 40 years later, the interest in Pokemon is still actually very, very strong. So they need to do something similar to that in order to be able to generate and sustain the interest in the companies going forward.
Kelvin, you were talking earlier about dollar and the rebound's impact on Asia stocks. Is it time to perhaps relook what we're seeing in not just Taiwan dollar, perhaps Korean won, given the possibility of intervention?
Absolutely. I've always thought that, the Asian currencies cannot weaken too much against the dollar, not in this kind of geopolitical landscape. Because if the US government imposes 15% tariffs on you and you depreciate your currency by about 10%, that in some ways actually neutralizes the impact of the tariffs. So I think there is, to some extent, some caution about how much the dollar can actually strengthen, or rather, how much the Asian currencies can actually weaken against the US dollar. And I think in the crosshairs of the US Treasury is basically the Japanese yen right now. And I think the Treasury Secretary has on quite a few occasions pointed out that the BOJ is actually behind the curve where inflation targeting in Japan is concerned. So I don't think the Japanese government, where the Ministry of Finance is concerned, will allow the yen to weaken dramatically without intervening in the market. And of course, intervention could perhaps actually help on a 1 week basis. But after that is basically what the BOJ is going to do where the Japanese yen is concerned. The market believes that the BOJ will likely hike in December, and so do we. But post that hike itself, what is the trajectory for the next 6 months with regards to the Japanese yen? As you can see, the Japanese yen has actually weakened quite sharply in the last 2 months to about 155 right now. And the previous low was basically about 160, 161. So we're not that far away from that kind of levels. But I do think that you will likely see BOJ intervention as we move closer to those levels.
What can the BOJ do at this point when you have the new pro-easing Prime Minister Takaichi, and also at the same time you have the last quarter GDP numbers actually contracting and giving her ammunition for the fact that the economy does need support? And let me add to that the layer of geopolitical tensions. When you have China, Japan going at it, what does that mean for the currency as well?
Well, you do need to basically balance your fiscal policy expansion and your monetary stimulus as well. The BOJ needs to exhibit independence and not be swayed by what the Prime Minister or the government wants them to do. That will actually bring credibility into the Japanese yen, into the BOJ's monetary policy stillness, right? So you don't want the BOJ to be in lock, stock and barrel with the government itself. You need to actually be careful and mindful of the fact that, a very weak yen will basically result in higher inflation further down the road, and you certainly don't want that coming in when the economy is actually slowing down. Then you have a very, very tricky situation to actually try to get out from. So yes, on the fiscal stimulus side, that's positive. That's pro-growth. But on the Japanese yen side, you really have to watch and make sure that the yen does not weaken dramatically further from here, because moving from 146 to 155 right now was quite a sizable move with regards to the Japanese yen and the dollar, right? So you don't want that momentum to actually be built into expectations. And if the BOJ loses credibility, then whatever they try to say to try to manage the movement of the Japanese yen is actually going to fall on deaf ears, and the industry is just basically going to disregard whatever the BOJ has to say and short the yen dramatically. Then we're going to be in a lot of trouble there.
Yeah, we'll be watching Prime Minister Takaichi meeting with the BOJ governor this afternoon. Kelvin, good to have you with us, regional CIO at UBS Global Wealth Management. And we go back to South Korea to check Pinkfong, of course, a Baby Shark creator, debuting on the Kosdaq, gaining 32% at one point, rallying more than 50% from its IPO price in its debut. Remember, this song has been viewed more than 16 billion times on YouTube. But as Kelvin was telling us, they need to create these characters who have lasting impact and maybe come up with new things like Pokemon that has survived the generations. More ahead. This is Bloomberg.
Now, the other top story we're tracking, Japanese media reports saying that senior diplomats from China and Japan plan to meet in Beijing today as this dispute over the Japanese Prime Minister's comments over Taiwan continues to simmer. Let's bring in our China correspondent, Min Lo in Hong Kong. Also joining us from Tokyo, our Japan economy and government editor, Paul Jackson. Min, let's start with you first. What are we seeing in terms of the diplomatic move so far from the Chinese side?
Yeah, I mean, things are certainly heating up because we heard the Japanese embassy in Beijing also issuing a safety advisory for its citizens, and there seems to be concern about gatherings in large crowds, potential protests, for example. So far, in terms of official moves from Beijing, besides the travel advisory that they issued over the weekend, we haven't seen anything else officially. But we have seen, for example, state media reporting that film distributors are now postponing the screening of Japanese films, citing cooling audience sentiments and declining box office numbers because of this spat with Japan. The question is, how much is state media going to incite further sort of anti-Japan sentiment that could encourage Chinese consumers to boycott Japanese brands? Because the Chinese government is not going to outright, put out a directive to ban certain things, or they are likely to do so, but state media is a powerful tool to sort of stoke those sentiment. And we saw that back in 2012 when Japan nationalized the Senkaku Islands, a lot of that boycott came about because of state media stirring up a lot of these anti-Japanese sentiment.
Paul, but Prime Minister Takaichi isn't backing down from her comments, right? What's been her position so far, and what can we expect next?
Well, I think from her perspective, she's a conservative leader who's taken power in Japan with the goal of showing leadership, forthright leadership, and a conservative stance. She feels she's just stated the obvious here. Obviously, it looks too specific, kind of a move away from the strategic ambiguity that would have been a safe position that government has been keeping up until now. So she's in no mood to retract the comments. In some of the opinion polls, we're seeing her support rating over 80%. So to retract now, to kind of buckle against Chinese pressure would be quite the wrong look for her, all the wrong optics for her nascent leadership of the nation. So I think she's going to be standing firm, and measures like we've seen with the diplomats heading to China to speak with Chinese officials, they'll be out there to hammer home the idea that, hey, look, we're not setting out some new position here. Nothing has changed. The Japanese government stance is the same as it always has been. There's no change here. That's the message they're going to be trying to hammer home so that they can try and cool tensions and ride through this.
Min, I mean, you mentioned 2012 and that diplomatic spiral back then. This has happened a few times every few years between China and Japan, sometimes with South Korea as well. So are we seeing any reaction from the Chinese tourists, from just the general public so far?
Well, I would say we're at the start of this cycle. So for the moment, we're not seeing a lot of reaction yet, at least according to sources from some of China's biggest travel platforms. They're not seeing a lot of cancellations. ANA also put out a statement saying they're not offering, well, changes to flights, right? And they're not seeing a lot of requests for that. But we are, as I said, in early days, it is possible that because of the sunk cost that some people have already put in, you know, booking attraction tickets and the like, that they may not be able to get refunds for. So they may not be so inclined to cancel their trips, but longer term, it is possible we might see a decline in new trip bookings, right? That's something to continue to monitor. And on Chinese social media, we are seeing some pretty harsh and nationalistic comments saying that that Japan is not repenting for its historical crimes from World War II, that they need to, you know, basically count and repent and repay all their debt. And here you can see one post saying, I'm never going to Japan in this lifetime, even if it's a free trip. And some people are saying we should plant our flag and put our troops on the Senkaku Islands to show them and teach them a lesson. The issue of national sovereignty is not negotiable. But as I said, there are also other people from different camps, especially younger people. We're seeing a lot of comments on Xiaohongshu saying, you know, different people have different situations. They can't get back the refunds. And, you know, it doesn't matter. Politics is politics and life is life.
Yeah, to Shery's point, though, every couple of years I see these stirring up of historical grievances. But Paul, let me ask you, is this a case of bad timing at a time where we've seen just the Japanese economy shrinking, the yen is weak? Ideally, they can capitalize on that for tourism. How big of a problem is that going to be? And then on that, add another layer, Takaichi, Ueda, they're set to be meeting as well.
Right. Well, on the first question about the potential economic hit to Japan, I think we saw in 2012 with the boycotting of Japanese goods that car makers and other major Japanese companies were hit by those moves. But then there was a rebound subsequently, and overall the longer term effect of the 2012 dispute was actually reasonably limited. I think South Korea saw more kind of collateral damage in its feud with China on the THAAD. Again, similar kind of figures. Tourist visits to both Japan in after 2012 and to Korea halved for a period. Some Korean firms were hit for the longer term especially car makers, over that dispute. So now it really depends on how companies are situated. For some car makers, the reliance on China's market is less intense than it was back in 2012, but their reliance on the rare earths that China supplies is more acute. So if this dispute deepened over the coming months, there could be significant consequences for specifically individual companies. But whether the economy buckles, I don't really see that happening. It's going to be certainly a nuisance and unfavorable, but perhaps not a reason to recant.
Bloomberg's Paul Jackson also with me low there on the latest when it comes to geopolitics and the broader Japanese economy, as well as we continue to watch the weakness on the Japanese yen. We're getting the finance minister Katayama speaking right now, saying that she's watching the FX moves with a high sense of urgency. Remember, this is sort of the rhetoric that the authorities in Japan use when trying to support the currency. She's also saying that it's vital that the currency moves in a stable way, reflecting fundamentals, and that she's aware of reports that the government fiscal stance is actually affecting markets. Remember, we're still watching for those fiscal concerns across Japan. The government's first economic package is expected to be unveiled as soon as this week, and we saw the JGBs under pressure right now. In fact, a 10-year yield at the highest since 2008. We have more ahead on the Asia trade. This is Bloomberg. We're watching the trading debut on the Kosdaq by Pinkfong, and look at that baby shark dance on the left side because it's a happy day. 42% gain on its trading debut. You can see right there. Let's bring in Asia Equities reporter Yu Gyung Lee. Yu Gyung, I mean, there's a lot of exuberance in the stock price today, especially given that the broader Kosdaq are down today. So is this sustainable?
Yeah, so it's not just the Kosdaq or Kosdaq, but overall Asian markets are down today. But the pockets of excitement coming from the small cap Kosdaq market from the Pinkfong's trading debut today, it's up more than, it was actually up about 60% at the open. So after the IPO was at the top, priced at the top of the marketed range, and that probably values the company at more than 500 billion won. That was at the top of this marketed IPO price range. So, but whether this first day pop is sustainable, that probably depends on how the company goes ahead with the intellectual properties and character development that are in the pipeline. So there are some source of optimism because the company's Baby Shark has been it's been a blockbuster hit with this YouTube sensation. But the company was also able to develop the characters such as Bebe Fin that's still popular, and the company has been highlighting during the roadshow that its reliance on the Baby Shark has been going down. So there's some pockets of optimism.
Is there enough optimism in the broader markets, to your point about how the whole of Asia is coming under pressure today? We're seeing the Nikkei also treading water. What is driving this? I mean, is it just the skittishness ahead of NVIDIA and the jobs report?
Yeah, I think I think market is now very sensitive to any negative news that could throw doubts on the AI sky high valuation, and that's what we are probably seeing in the market today with the news on some of the questions or doubts over the AI valuation. Again, we are seeing some of the key stocks in the supply chain of NVIDIA declining today. Although people wouldn't say this is like the start of the bear market or anything, we're definitely seeing the profit taking in the chips companies such as SK Hynix and Samsung Electronics after NVIDIA finished lower. So I think people will want to just assess what the NVIDIA's earnings is going to be later this week.
Yeah, and to your point, we are seeing SoftBank, the big drag on the region's benchmark today. It's hovering at the lowest since early October, and these declines are the most we've seen in the past couple of days. So watching these tech giants as well, the impact on the broader markets. Our Asia stocks reporter Yu Kyung Lee for us. Thanks so much. We have more ahead on the Asia trade. This is Bloomberg. we have some information coming out on the RBA's minutes from its November meeting. And of course, this could give us insights to the bias that the central bank has between inflation and jobs. And we are watching in terms of how it weighs out the central scenario. It sees that the economy is in balance with two-way risks. It also sees that on balance, financial conditions are slightly restrictive. Now, RBA members determined that they could also afford to be patient. So I'm not sure the extent in which what we're hearing from these minutes from the November 3rd to 4th meeting actually moves the needle in giving us further insight into the bias of the RBA board. It also says that it's remaining cautious, data dependent amid uncertainty. You are seeing stocks on a downward trajectory amid the selling that we're seeing across Asia. That pressure coming on the Aussie as well. And of course, for the Australian market, key to keep in mind what's happening in China. But we're looking as well at what we're seeing in the broader markets across the region, Shery.
Yeah, really broadly speaking, it's a down day, right? The MSCI Asia Pacific Index at the moment losing ground, and the tech sector is down 0.9%, being led lower also by industrials and materials. Really every sector in the red right now. This as Nikkei stocks are also down for a third consecutive session. We continue to watch the escalation of geopolitical tensions between Japan and China. The Kospi down 1.3% despite the rally on the trading debut of Pinkfong, and the ASX 200, as you mentioned, down 1%. We're also following, of course, and setting up for the market opens in China. Analysts say Chinese consumer stocks are poised to extend the rebound as household demand revives, government support strengthens, and investors rotate from growth to value. Let's bring in equities reporter Avril Ma. Avril, so should the recent rebound that we're seeing in consumer staple stocks in China be viewed more as a rotation, or investors just positioning on expectations that we're going to see a bottoming out because of fundamentals?
I think at this point, we should probably be thinking this as a rotation rather than fundamentally driven. That's really just because a lot of the high flyers this year, be it biotech, be it semis, they're just really overvalued, and their gains have leveled out into the past couple of months. With tradition, it's very common for funds to start looking for the next big driver into the final months of the year. And I think, fundamentally speaking, we aren't seeing that uptick yet. I mean, there are bright spots, but there's really just not too much to write about at this point.
So what would make the difference in terms of giving you more to write about, in terms of reasons to being upbeat? What else do we need to see?
I think key here not only is policy. I mean, one of the more confidence-boosting signs that we saw was in the next 5-year plan, consumption and domestic consumption especially is coming front and center. I think what is key here is really just the wealth effect that is lacking with property not seeing a bottom in the near term. So people are wondering what will provide the wealth effect in the coming years. And I think some people have come to the conclusion that that might need to be wealth expansion coming from equity positioning by households. But of course, that also is still in its very early stages.
Avril, thanks for giving us some sense of what to watch for when China markets open. Bloomberg Equities reporter Avril Ma. Now, also tracking this new filing in embattled Hong Kong developer New World, saying that it's expected to reduce its debt via exchange offers. Let's bring in our China credit reporter, Trista Sinyiluo. So, Trista, talk to us about New World's plan and how are bondholders reacting so far?
Yeah, so right now we're already past the early deadline for creditor to join New World's up to $1.9 billion debt swap plan. I think over the past 2 weeks, creditors have been, waiting their option whether to join the plan, because if they say yes to the plan, they need to take up to 50% haircut. But they can enjoy more stable cash flow from Victoria Dockside, which is the Crown Jewel access in Hong Kong. But if they decided to become the holdout, while. They can possibly see their bonds zoom higher, depends on the successful of the debt swap plan. So there's actually a game theory dilemma here. I think creditors are actually waiting on their option, but they still have time, until December 2nd to decide whether to join the plan. And last week, one of the lead banks told some investor that they received strong indication of interest for the swap. But we really need to wait and see, how much debt New World can finally manage to reduce from this debt swap plan and what they will do next.
Yeah, so tell us a little bit about the significance of this debt swap in the broader context of the fact that we continue to see the real estate downturn in Hong Kong.
Yes, so under the full participation, the debt swap plan can help New World to reduce 1.6 billion notes. But we still need to remember that New World is far from out of the wood yet. So this debt swap plan can definitely help them a bit to stabilize its financial. But people are still wondering what the company will do next, because even under the full participation, the company still will have 1.3 billion remaining perpetual notes. So that will become a dividend stopper. And so analysts are telling us the company could roll out another round of liability management exercise, or finally have the equity injection plan to come.
And beyond that, what next are you watching out for in this saga?
Yeah, so for New World, we were definitely watching closely about, the result coming from that debt swap plan. We could hear from any update from the company anytime soon, but we haven't heard any official update yet. So that's definitely the key thing we're gonna watch. And another thing is any information that could, taking place around the equity injunction plan I mentioned earlier, or, just general, the creditor reaction to the plan overall.
So Hong Kong regulators also signaling growing concern here. What are they doing in order to help with this broader downturn in the real estate market?
Yeah, so earlier this year, we see Hong Kong and May, the city's central banks, have been highly involved in trying to help New World to seal a mega refinancing deal and try to help them to avert a debt crisis. But we are right now increasingly seeing such a pretension extended to smaller players, such as, developer Avril and also asset manager Gold Capital. So that's actually the new thing we are seeing. And the city's central bank is definitely more involved in, checking in on banks' lending decision right now. And another thing raising bankers' concern right now is about the inflated valuation number behind those commercial real estate, which are acting as the loan collateral. So we are continually seeing some, actual sales number are way under the valuation number. So that kind of concern actually trigger bankers to do more health check on their own loan book.
China credit reporter Trista Shinyi-Luo there with the latest from Hong Kong. We have more ahead on the Asia trade. This is Bloomberg.
In recent years, the garbage lending has not gone to the public markets. The garbage lending has gone to these private markets. And private credit has been very popular and is now increasingly been over-allocated to by large asset pools.
That was Double Line Capital founder Jeffrey Gundlach weighing in on this outlook for private credit, right? We're seeing these cracks emerging. We're also shining the spotlight on Australia, where the corporate regulator there is threatening tougher legal action against private credit funds that fail to protect investors. The crackdown on this fast-growing industry follows high-profile collapses in the U.S., including auto loan financier Tricolor Holdings. And we have some analysis from our colleagues on this.
Bloomberg Intelligence senior industry analyst Matt Ingram joins us now from Sydney with more on this. So first of all, Matt, set the scene for us. What's the scale of private credit in Australia, and what are some of the risks that the regulator wants to address?
Yeah, hi. It's a great place to start. The question is, has the horse already bolted, and are we just shutting the gate too late? It's already a $200 billion industry here in Australia. There are two predominant risks that the regulator has identified in its report. The first is, how are we taking account of collateral, and how are we properly disclosing the credit risk for investors? The other big concern is, are these operators of these funds passing on the substantial yields that they're earning from the borrowers? So are we getting a good risk-reward return for those retail investors, I guess, is the big question. And are they actually aware of the risks that they're taking on?
Yeah, so really this protection, or the idea of protecting retail investors, but when it comes to the bigger players that are already in this space, including the listed players, how much exposure is there to private credit?
It's a tough one to answer. We know that Macquarie now has about 70% of its shareholders' equity tied up in private credit assets. The credit quality of that book to date's been very good. They did make a write-off when they reported results in March. But that business has grown very fast. No credit issues yet, but it's a big exposure. One of the interesting exposures is Judo Bank, one of the smaller lenders. They've recently opened a warehouse financing facility looking at private credit, helping finance non-bank financials. So that might be one to watch. Again, no credit issues for Judo either, but that's a relatively new business with a very big opportunity. So potential credit issues there as well.
The industry super funds, also biggest holders of retail assets. What does their exposure look like?
This is one of the murky things that the regulator's trying to sort out. Disclosure is not great as terms of where these assets sit. They set in fixed income. We've talked previously about the super funds really ramping up their equity exposure. So on the face of it, they're not going deep into private credit. The nuts and bolts of that's one of the ones that I think the regulator would like to unpick. How do we disclose what assets these super funds are holding in terms of private credit exposure so that their investors know what they're on the hook for?
Bloomberg Intelligence senior industry analyst Matt Ingram there with that insight into Australia's private markets. We have more on Australia ahead every Tuesday at 11:40 a.m. if you're watching in Sydney, 8:40 a.m. in Hong Kong.
And you can also tune into the Bloomberg Australia podcast that delves deeper into the biggest stories shaping the country's role in global business. Find that on Apple, Spotify, or Bloomberg.com. We have more ahead on the Asia trade. This is Bloomberg.
Right, we do have breaking news at the moment. China is starting to market its Eurobond sale to raise up to 4 billion euros. We had seen this choreographed already. Sources have told Bloomberg that this could happen as early as today. Market watchers expect a similar reception for China's euro-denominated bond offering, which would add to a record year for global bond sales, where demand has more than matched the debt being sold. That has been really interesting in the bond space, borrowing happening in all fronts at the moment.
Yeah, I mean, we're seeing that among the U.S. hyperscalers as well. Some of the top corporate stories we're tracking as well. XPeng's U.S. traded shares plunged 10% after its fourth quarter revenue forecast missed expectations. The EV maker expects $2.6 billion in sales, even as its third quarter loss narrowed more than expected. Investor optimism had surged as XPeng pushes its robotaxis, flying cars, and humanoid robots, but the weaker outlook raised new questions about its path to break even. Rio Tinto is adding new surcharges on aluminium headed to the U.S. as tariffs tighten supplies and inventories drop. The extra fees stack on top of the already high Midwest premium, pushing costs to more than 70% above the raw metal price. The U.S. aluminium market is now described as all but broken, with buyers forced to pay up as Trump's 50% tariffs drives stockpiles to record lows. UBS Chairman Colm Kelleher has held talks with U.S. Treasury Secretary Scott Bessent about potentially moving the bank's headquarters to the U.S. These discussions come amid uncertainty over Switzerland's proposed capital reforms, which could raise UBS's requirements by roughly $26 billion. The Trump administration is said to be receptive, even as UBS continues lobbying to ease the Swiss rules.
And take a look at how cryptocurrencies are trading at the moment. We continue to see the downside pressure on Bitcoin down 0.2%, really under pressure after the biggest loss in years. The total market value of Bitcoin plunging by about $600 billion from an October high. And what's interesting is really that there are few explanations that hold up on why we continue to see this market sell-off, especially after that liquidity event that we had in the past month. Let's bring in Bloomberg senior crypto editor Ryan Weeks. Ryan, so as I said, are there any real explanations of why this continues to happen?
I mean, there are a few potential factors. Bitcoin tends to be seen as a leading indicator for wider market sentiment, which is very much risk off at the moment. And so, that's one macro factor that's sort of weighing on Bitcoin and other cryptocurrencies. Another is that the digital asset treasury craze that was really sort of the hottest trade in crypto earlier this year is really quickly unwinding now. So listed companies that have accumulated cryptocurrencies on their balance sheet, earlier in the year, they were trading at massive premiums. Michael Saylor's strategy is probably the best example. Now we're very quickly seeing that unwind, and some of them are now trading actually at a discount to the value of the tokens that they hold on their balance sheet. But I think the single biggest factor is that early in October, there was a wave of liquidations that hit cryptocurrency. I think it was about $19 billion worth of leverage positions were wiped out in a matter of days. And the market's really, really struggled to recover from that. We haven't seen futures traders, options traders come back into the market, placing bullish bets on cryptocurrencies. And that's been a real headwind for the crypto sector, and one from which so far it's struggled to recover.
How much further do you think things go from here then, as well as being cognizant of how these factors and the stars, if you think about it, they align for crypto and crypto faithful, whether it's some of that more promising political backdrop, Wall Street support, institutional investment. So do we see a sort of floor under digital currencies?
I mean, you're absolutely right. The stars have aligned in a way that probably few would have predicted a year ago or slightly more than a year ago. You have huge political support from the Trump administration. You have massive institutional flows into, exchange-traded funds in the U.S., various other factors that should be meaning that crypto is pointing up, and in fact, it's pointing down. And I think that's the big problem for the industry at the moment. People don't see many sort of growth stories ahead, many catalysts for growth in the way that they did earlier this year. And what we're now seeing is that traders are actually buying downside protection that sort of indicates that they anticipate we could get a fall to sort of $80,000 for Bitcoin, which, would be its lowest level in quite some time.
Ryan, you touched on some of this earlier, but talk to us about when it comes to some of these specific digital assets. In particular, when it comes to how they're tied with treasuries, what are you seeing in terms of the shifts there and the risks that might translate into the asset class?
So essentially, earlier in the year, these digital asset treasuries, they were a big tailwind for cryptocurrencies because they landed on stock markets. They were suddenly this new source of buying demand for a whole range of cryptocurrencies, not just Bitcoin. But what's happened is that because their stocks have come under pressure and increasingly some of them are trading at a discount to their holdings, some are actually having to sell the cryptocurrencies that they were set up to accumulate in order to fund buybacks, and sort of relieve some of the pressure that they're under. So that's a real reversal from earlier in the year. And it's a big problem for the crypto industry. I don't think we really yet know quite what the impact will be. It's kind of uncharted waters.
Ryan, and I think that's a risk that we continue watching, especially this week, as we get some of these data points from the U.S. and on the jobs front, maybe that also prompts a bit of further risk off in markets, and does that mean further selling in these crypto assets? Thank you so much for talking us through some of this. Crypto senior editor Ryan Weeks for us. Now let's talk through also one segment in the market.
You're not seeing necessarily that risk off.
Very idiosyncratic play, I have to say. And somehow we are back looking at the price of Pinkfong. And for those of you that are uninitiated to the very viral Baby Shark song, this is, of course, the creator of that tune. And we are seeing it making a splash, pun unintended, in its trading debut in South Korea. But aside from that, we're also watching developments in Singapore. We got to talk about why you're in town, Shery.
Yes, I do want to go to NEF, but before we do, I can't believe the Baby Shark was watched, 16 billion times?
How many times did you watch it?
I don't care about Baby Shark, but then the thing is, like, how many people are there in the world? 8 billion. Then every single person in the world watched it twice at least.
Yeah, the math
doesn't math. Insanity. Yeah. Having said that, I'm in Singapore because of the New Economy Forum, of course, every year, and a lot to unpack. Of course, we do have the new trade tensions, the tariffs, the Trump 2.0 administration, what that means for the global economy, and of course geopolitics as well. We've continued to follow the tensions between China and Japan, something that will be talked about during this summit.
I think the other thing that we also watching, given how the size of the market, the valuation risk in AI, is how that is shaping who next in AI. What is going to be the leadership, right, between the U.S. and China? And as we see sort of the factors in play to build that out, is there only one version of AI leadership? And at this moment, does that also mean that, when we talk about the smaller players, how they are supportive of that ecosystem?
And it's really interesting because I've come to NEF now for a few years, and you see the narrative just changing every year that we're here, whether it's a trade narrative going to tariffs during the Biden administration, more focus on regionals and multilateral frameworks. And then even on artificial intelligence, we started the conversation between this China-U.S. tech rivalry, what this means for the bifurcation of trade, bifurcation and divergence when it comes to supply chains. And now this year, you have this exuberance around artificial intelligence, anything to do with data centers. So it will be really interesting to see how the conversations get focused there. And you can see that huge lineup of high-profile guests that we'll be talking to throughout this week.
Yeah, and you see as well those politicians, heavy hitters really that could be weighing into this change in the landscape that we're seeing geopolitically. Let's also take a look at how we're setting up for the session on the Greater China markets. As we already saw, if we can take a look at some of these futures, as the U.S. session was a bit troubled, we did see that risk off. We are pointing lower on Hang Seng futures. TAIEX already gave us that similar direction earlier. That's it from the Asia trade. Our markets coverage continues. This is Bloomberg.